Russell. The Russell continues to show its weakness. That you can see the respect of the 200 period moving average here, right? All the way up to here, right? Boom. And then boom. If it comes down and retests this, if it holds this level of 216 and goes higher, and then you get above the 20. See, if this comes down to the 200, this 20 period simple is going to come down too, a little bit. So if it comes down here, holds, then what you're looking for is a break above the 20 as your entry to go long. But we are far from that. The other way of thinking about going long is if you break out similar to, NVIDIA, Apple, if this breaks up, takes out this level, then a pullback or a retest of this and a hold, that's your long. If you break this and it just keeps going, then obviously we're looking at correction territory. The other thing that we'll look at in a few minutes is we'll look at some weekly charts. That'll give you some more information. Put call ratio kind of leveling off here, but looks like some puts starting to come into the market. And if we look at this in conjunction with the VIX, that'll be the telltale signs that investors are nervous. They're not really showing their nervousness just yet. But isn't this interesting? So one thing I noticed this morning when I was looking at the put call ratio, so check this out. You guys may enjoy this. I have the 10 period moving average here, right? That's on a daily chart. And I have a 5 period moving average on the daily chart of the VIX. I think it's a 10. Let me see. Sometimes I use the 9. It doesn't really matter. 8. So check this out. I've got the 8 period moving average here, 8 EMA, on the put call ratio. So I'm going to draw it out. And then a little, okay. And look at this. I got 5 period moving average on and this is on the put call ratio. And this is on the VIX. And look at this. Check this out. What do you think about that? The moving averages, pretty close, the 5 and the 8. I mean, I could change. I know Van likes the 8. He's a big fan of the 8. Change that to 8. Same thing, but check it out. Isn't that interesting? So if this is an extreme level on the put call ratio as it breaks below 0.7, that means there's an extraordinary amount of calls versus puts. Everybody and their sister is leaning in long, which means that the S&P 500 is forming a topping pattern as the extreme number of calls pile up here and get weighted way too much to one side, where the market usually swings the other way and then puts show up and then you get a sell-off. So put call ratio is certainly signaling that this is way, way extreme. Below 0.65 is very extreme. This would be danger zone, 0.62 on the daily. You don't see it very often, but if it does break through here, it's a bearish sign for sure, because it means they are blindly buying calls at such a large rate that it's just one little shoe drop and this thing will spike like that. But in the absence of that spiking, Very extreme, very extreme. Oh, we got a few puts that came in, a little bit of a scare a few days ago, but then they went right back to calls again. Starting to hook up a little bit. But this is a bearish indication because of the extreme amount of calls. It's not in the middle. It's really down here, which shows extreme. And as it is an extreme level of calls, you'll see this lofty all-time highs. This is a top here in the S&P 500, an extreme amount of calls here. But if you look simultaneously of that moving average, you'll see that the VIX is in a squeeze and has been finding a tremendous level of support here. And as it finds support, as it goes into a daily squeeze, as you get into the seasonality of the fear index, which begins in July and it goes through October. I showed you guys in 2 different live sessions recently the seasonality of the summer of fear. From July to October, you really see the VIX spike. And so this is telling me that we should see this soon. Just take it, Now, could it continue down here with great earnings? Yes, they could keep leaning into calls, happy to be long and delay the inevitable. They could. Could this stay down here like another month? It could. Another month, another week, until a bad report comes out, and then it goes up. Then it gets over 20. Then they get nervous. Then they buy calls. Then they buy puts. They switch to puts. Then this thing starts to pop. Oil goes with it. Nvidia has shitty earnings. Apple drops. And then the Fed goes, well, maybe we should postpone the rate cuts. So anything can happen, but I'm looking at the technical perspective of the put call ratio being incredibly low and the VIX being seasonality wise, ready to do something, and it is now in a daily squeeze, just ready to do something. So I'm just keeping an eye on this, looking at the dollar weakness. Does it break through here and get even weaker? If it does, you'll see metals continue to go. If it finds some support and then works its way back up, that's when you'll see metals reverse. And in the meantime, we're keeping an eye on the big boys. 2% down in Nvidia. Apple was up higher. It pulled back a little bit. And one of the leading indicators that we've been talking about forever is the Russell.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.